Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a financial filing that's juicier than a Black Friday sale, but maybe not as fun to wade through. We're taking on QVC INC's latest annual report, and trust me, there's more to this than just bedazzled blazers and countertop ovens. QVC, in case you've been living under a rock, is that video shopping giant, bringing curated consumer products right to your living room, or more likely these days, your phone. They're all about that interactive shopping experience and claim to reach over 200 million households every single day through their broadcasts. Now, a quick heads up, this report, like many others, has some legal language called forward-looking statements. Basically, they're trying to predict the future, but also covering their behinds in case those predictions don't come true. So don't take everything as gospel, but let's get into it. One of the important things that they need to make sure to mention is, of course, the risk factors. There are a lot of things that might impact them negatively that they need to tell investors about. A big one is customer demand. If people stop wanting their products, they will be in trouble. They also are at risk if their systems go down because their entire business relies on technology. And because they have international operations, they are exposed to different governments, different tax laws, and currency fluctuations. QVC isn't a publicly traded company in the traditional sense. Its stock is held by Qurate Retail Group, which in turn is part of QVC Group. This is very important to the fact that the owner can do what they want. It's a bit like a private club where the members make the rules, not the general public. QVC's whole game plan centers on engagement and experience, and their strategies are focused on doing just that. They want to connect with customers wherever they are, whether it's on their website, streaming platforms, or social media, and aim to redefine the shopping experiences. During 2024, QVC started shifting its information technology operations to a managed services model. Basically, instead of handling all the tech stuff themselves, they're hiring outside specialists. This is a big shift in how they operate. There's also a big consolidation coming in early 2025, merging QVC and HSN operations and closing down the St. Petersburg, Florida campus. This is a sign of QVC trying to streamline and cut costs. Diving into what QVC actually sells, their product mix is pretty diverse. It is about home products 41%, apparel 18%, beauty 18%, accessories 11%, electronics 7%, and jewelry 5% during 2024. This mix allows them to adjust quickly, shifting their programming and product mix to chase the latest trends. They have long-term contracts with shipping companies, which in certain circumstances provide for favorable shipping rates. This could give them an advantage over someone who does not have those agreements. They are successful at having repeat customers, as 91% of their shipped sales came from customers that had purchased in the past year. These repeat customers spend an average of $1,460 each, which is a great sign of loyalty. Being in the business of selling and promoting merchandise means they are subject to a lot of government rules. The Federal Trade Commission, the Food and Drug Administration, and even import and export laws all have a say in how they do business. They have even had consent decrees with the FTC related to weight loss and dietary supplements from past issues. And to that end, HSN paid a $16 million penalty in 2023 with the Consumer Product Safety Commission. All of this to say that they have to be very careful about what they sell. There are also some related party transactions. One worth mentioning is the promissory note that Liberty Interactive LLC owes them, worth $1.8 billion. It earns them a small amount of interest, but again, it is another connection with their parent company. Let's look at their financials. Net revenue came in at around $9 billion for 2024, which is down from $9.4 billion the previous year. They attribute this to a units shipped decrease, along with lower average sale prices. After taking into account all their expenses, it's a loss of about $1 billion. Now that is quite a swing from 2023 where they had a profit. This was impacted by some restructuring charges as well as some pretty big losses with assets. Specifically, the company says that they identified impairments for the QXH reporting unit related to the QVC and HSN trade names and goodwill. Impairments of assets is not great because it means they are worth less now than they were before. Looking at their ability to manage their debt, they've got a lot of it. The report shows almost $4 billion in total debt. While they have a credit facility available, high debt can limit their flexibility and make them vulnerable if things go south. One more thing I noticed is that a large portion of their affiliation agreements with distributors expires between 2025 and 2029. So, it's crucial they maintain and renew these agreements because if they do not, they will lose customers. It's interesting to note that their information systems may be subject to increased risks due to state-sponsored actors that could materially impact their information systems and operations. It will be important to see how they combat this risk. Ultimately, this report paints a picture of a company in transition. They have loyal customers and a plan to evolve and grow in the streaming and e-commerce space. However, they have a heavy debt load and is also subject to the whims of its controlling parent, Qurate Retail Group Inc. The large amount of debt and the dependence on QVC's performance to make payments on the debt could get them into trouble. The results of ongoing business changes is yet to be determined. As they grow in digital sales, they must also deal with cybersecurity threats that could disrupt their business. One more thing that stood out is the section on inclusion and belonging, which shows the company focusing on building a positive and inclusive culture for their employees. They highlight initiatives around team member engagement, health and safety, and diversity. These types of initiatives and values are often highly sought after and can contribute to better performance overall. So overall, what's the verdict? QVC is at a turning point. Their path forward will depend on navigating a changing retail landscape and being able to continue growing while also staying on top of their debt obligations. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.